Happy Tuesday, traders. It is Matt and Jacey with Empire Algorithmic Trading here to bring you your daily dose of Vwapvision's Stock Talk.
It's where VWAP stands for volume weighted average price. It's the best indicator on the market. It tells you exactly who's in control, buyers or sellers. And right now, Matt, it's certainly not the buyers. So let's just get to some stock talk.
Stock Talk.
Well, Matt, it started off pretty exciting. I mean, we found a bottom yesterday, or so we're hoping, right? Found a
I love
bottom yesterday,
bottoms.
right at the long-term VWAP, opens up big, and I'm thinking, okay, now it needs to hold because the bear market syndrome is just the exact opposite of a bull market. They open up strong, fade throughout the day, and unfortunately, that's exactly what
Oh.
happened. So yeah, let's just take a look at some charts.
It was kind of crazy. I have a quite a few friends that kind of follow us, and they're like, oh my gosh, this is the bump you were talking about. We're going on a run. It's gonna be a big one."
Yeah,
And then at the end of the day, well,
you
let's
got six and a
beat.
half hours in this session, right? Yeah. I've learned that lesson. I've learned that lesson the hard way. But no, I mean it's just I mean it's broken. It just looks broken. I mean, there's not much to say about it. It's very disappointing. I was kind of hoping we would, this morning when I saw it up like that, I was kind of curious where it was in relation to the high from the fourth here, where it gapped down big, and also where this VWAP is that appears to be playing a little bit of resistance. So we're stuck in between two VWAPs. The only positive side is volume was lighter. But of course, the volume over the last 3 days, each one of these little white dots on the volume bar means it was the highest volume in the past 250 days. So then the next day was the highest, and the next day was the highest. So that was just bound to break there. But I mean, it was still significantly large volume. Just a lot of volatility, just not a market you really want to be a part of. I was kind of hoping we would see a little bit of strength and maybe get up to the 10-day average. Ideally, the all-time high VWAP, which is currently sitting around 5680. So we're about 700 points away from that, 600 points away from that. That's where I would at least look to. If you weren't out now, try to get out around that and possibly short it. Those are some trades. I think a little bit more than 1% away from the bear market. And so if only 12% of the recoveries that corrected 17% survived, I'm sure once you get down to 18.5%, the probability is closer to 90%. So it's almost a sure bet. I mean, the rest of the market is in a bear already. The
Yeah.
Nasdaq is, the small caps are, the mid caps are.
Yep.
So, I mean, it's just a matter of time. But officially, we follow the S&P because it's just always been just the standard bear for the market going back over 100 years. So that's a little bit of where we're at. It's unfortunate. I'm still excited. You start thinking what's next, right? And what's the next bull market going to bring? How are we going to get there? And you can have the best case scenario is that I can see that from everything I'm reading is that countries come to negotiate. They devalue their currency because I still believe that's the ultimate goal is to devalue the dollar globally. So they agree to different terms, currency trade terms, and we end up stronger with a stronger, more competitive manufacturing sector. The problem is China. There's a lot of problems. The problem is China has invested $1.9 trillion in the last 4 years in their manufacturing sector. And all we've seemed to have done is we did pass the CHIPS Act, which was good, but of course this administration is calling that terrible and they want to get rid of it. But other than that, we've decided to abolish the Department of Education. I mean, we're going in opposite directions. China, the BYD is making two factories that have twice the capacity of the largest car plant in the world right now. Twice the capacity. They've built in the last 4 years more petrochemical refining capabilities than Europe, Japan, and South Korea have since World War II in the last 4 years. They've graduated 1.4 million STEM students in the last 4 years. It's the Huawei has a new campus that they're building that can house 35,000 engineers and has 10 times more office space and lab space than Google does in the United States. And so it's all built up behind an already wall of protectionism, and the rest of the world is going to have to face that. And so, what does Donald Trump do? He decides to take on the whole world instead of getting together. So, the odds of them pulling it off, in my opinion, are not good. It's slim and none. Why on earth? I'm just thinking, why would I make a deal with the United States if they just turn their back on a deal that they just made 4 years ago? Right? How am I going to make a deal with the United States with this administration that could turn around and change their mind in a year? That has turned their back on alliances of 70 years, that has trashed our allies continuously. Why are they going to come to the table and want to deal with us, make our position stronger? Say, yeah, America, you already have 25% of the global GDP. We understand you'd like some more, and you want a stronger position. We're going to acquiesce to that because you have the power right now. It just doesn't seem right. It just doesn't seem logical that it's going to end well. And he can't back down, because if he backs down now,
Yeah.
it's going to extremely weaken the United States in every regard. And so now we're in it, right? Now we got to see this thing through and hope that it ends well. Hope that we end up stronger on the other side. And there's been no plan to strengthen our manufacturing base. So what are we doing? So we're loosening the restrictions on coal. Okay, what? We're restricting the use of green energy. The next step, right? We're trashing the CHIPS Act, and we're talking about using the funds from the tariffs to fund tax cuts over the next 10 to pay for the tax cuts, or extending the tax cuts, I should say. So that doesn't reek of, yes, we're looking to rebuild the American middle class. It just doesn't add up, man. And so, and then you have the capital flow problem. That's the other big thing is our economy, we have become, instead of an exporter of manufactured goods, we've become an exporter of assets. And we've benefited by that, by stocks, right? And so our entire financial sector, the large part of our economy, the service sector, has been going gangbusters because of that. Where we screwed up was we didn't share that with the rest of the country. The service sector kept it all for themselves and said, "You guys are screwed," and that's not right. We do need to have, and I hate to say this kind of thing, but we do need to have some sort of redistributive policies just simply around industrial manufacturing, because we need that shit. But we also need the strong assets that we have. So we need the strong dollar. And the reason why we got that is because of the alliances we've built, because of the stability of our political system. And these guys are lighting it all up on fire. And they're expecting us all to come out great on the other side. Like the whole world's just going to come along with us. Man, it's the worst case scenario is a very shit situation for our country. Pardon my language, and it's terrifying. I was thinking with my son's account for the longest time, like he's just going to ride this through. The more I've read over the past 3 or 4 days, I've completely changed my mind. I've asked him to, I'm looking right now, like, hey, how do we get you out? So what's next, right? How do we look beyond, because the capital flows into this country are going to be diminished. That's just a fact, right? The CEO of Citibank sent a memo out to all of their employees today that they need to prepare for a fundamental change in trade and capital flows. And that means money not flowing into this country. So that means lower PEs on equities. That means lower growth for stocks in general. That means higher interest rates for our treasuries. So that's not a good scenario right there. So what's the bullish case? How do we get to the other side? Where's anybody talking about this saying, well, this is the next step? I mean, the next step, the reason why they're not saying it is because the next step is more chaos. And they need to bring people down to heel across the country, and that's the only way they're going to get them to the negotiating table. That's a very dangerous game to be playing, and it's just too bad that you have these you know, it's just too bad. And that's just me reading the worst case scenario. And keep in mind, I'm an eternal bull. I'm an
Yeah.
optimist, right? I love this country. I think we have immense opportunity. That's why I love the stock market. And it will come back. It's just, I don't know if we're going to get the gangbuster returns, the 16, 17% returns we've seen over the last 10 years. It very well could be the 6 or 5% returns that we saw in the 70s, right? And so that's the downside, but there will be another bull market. I mean, that's just a matter of time. It's just gonna be a radically different world. And I don't know, I'm having a hard time seeing what's on the other side of this. Like, what happens if the United States loses? Okay, let's play. I'm sorry, man. I'm going off on a tangent here. I'm just thinking.
Well, and real quick, I just want to put this for some of our younger listeners. This might be a good example. Jacey, do you know who Mr. Beast is?
Yes, I've heard of Mr. Beast. I haven't seen one of his things, not once.
That's fine. You don't even have to for this. So he basically got his start on YouTube, went huge on YouTube, and now he's actually one of like the world's largest chocolatiers because he came out with a candy line, a chocolate line, right? And he calls them Feastables. And he wanted to basically build this company on sustainability practices, ethically sourcing his cocoa and all of that kind of stuff. And so he basically manufactures most in Peru, and that's where he gets a lot of his cocoa from. And the United States is actually a world exporter in chocolate and chocolate derivatives, which I did not know until earlier today. But you would think with tariffs, okay, the goal is to bring those factories in. And he basically just kind of came out and said, look, if my costs of goods sold are going up 10, 24, 30%, he goes, it is way cheaper for me to build a factory there or in some parts of Africa, as well as where he's sourcing some of his other cocoa from since he's been growing so fast. But in order for him to continue ethically sourcing it, he has to go to these places and he's like, that's where I'm going to build my plants. He goes, we'll figure it out. He goes, the 10% tariffs, he goes, I'm sorry, but that is going to be passed on. That is something that you are going to have more expensive Feastables. And it's already a premium chocolate product because all of his chocolate is ethically sourced. And so for those who are younger that might make it's not necessarily for sure only going to drive production back to the United States. Depending on your good, depending on what's being manufactured, depending on the entire supply chain, there's a good chance it drives industry out of the United States just as much. So it's a fundamental change is what's coming. A fundamental change.
Yeah. Oh man. Yeah. Well, happy stock talk today, everybody.
And again, it's
No.
it's a fundamental change.
Yeah.
What we do here with seeing the stock market is all of those decisions are going to get fleshed out. We're going to find a way where people can then predict business, can start making projections, can start doing this. We're just in a state of turmoil right now, of intense turmoil and upheaval. It will level out and mellow out and things will change. Things are always constantly adapting. It's just we're at an unprecedented rate of change that we don't normally see.
Yeah. Yeah. And that's probably why we're seeing the market look completely broken like that. So,
Mhm.
well, not probably, it is why. So, yeah, I don't know, man. It's just, it's very discouraging. The other thing is, when I watched, it was really neat actually. The Chinese New Year, or Spring Gala, they had dancing robots come out with on the stage, and they were dancing, and it was really impressive. And I'm thinking our president just called the Chinese peasants, and these guys have dancing, and I'm like, that's not peasants that I'm watching right here at this celebration, right? And they're gonna kick our ass, is what it looks like, and I don't know if anybody's really been paying attention to what's going on over there, and I mean, if
Well,
DeepSeek was a kick in the pants, right? And so.
yeah.
They've got there was one plant, I can't remember. They've gone from having 300 robots to over 800 robots in the one plant in the last 3 years. So they're automating their entire manufacturing system. They're adding artificial intelligence into every step of it. And like I said, we're making it easier to mine for coal. So it I don't know, man. It just doesn't seem like we're on this. That's the other thing. They've installed over 100,000 super fast chargers. In the past 2 years. What have we done in that regard? It's just doesn't seem nothing. It just doesn't add up.
Well,
From
and
what?
the other thing that we also have to weigh this with as well is, the United States, you got to be careful about the media you consume because a lot of the media that we consume, they talk about, sweatshops and super impoverished, and they talk about all of the negative that you have in parts of Asia, China included. And don't get me wrong, there is that, but it's weird to point to that and think that that's the only thing when we also have poverty and horrible working conditions here in the United States. Like,
Yeah,
we're not immune to that either. Neither are they. They also have some incredibly developed areas that are light years ahead of 99% of our country. So to try to boil anything down to they're so far advanced compared to us or they're so far behind us doesn't get the full big picture of everything. You know what I mean? And that's what people have to understand is it's never as black and white as it gets portrayed in the media. Never.
yeah, yeah. That's true. Absolutely. So. Yeah, that's it. That's it for our tariff China.
Yep.
What the hell is this administration doing rant? Let's just get back to some stocks. So
Let's do it.
S&P, yeah, S&P finished down 1.5%, a little over 1.5% today. We're at 49.82. Like I said, we're stuck right in between these two VWAPs. The VWAP from, I believe this is the low. We're just going to change that. We're going to make that a different color. Let's make that green. Yeah, the VWAP from the low of the last bear market to the high in September of 23, which is turned out to be when you look at the chart pattern, that's a pretty significant handle. So that's why I put an anchor there. That was a nice 3 month, 3 month correction there. When it blasted off, man, stocks just rolled. That was a fun time to watch. That's actually when I started figuring out the whole VWAP part. So it's been 2 years in the making. I've been wanting to see how a bear market plays out. So I am kind of excited about that aspect, even if I am relatively despondent about the long-term prospects for accelerated growth for the S&P 500. But I love this country, and we're gonna come out of it on the plus
Yeah.
side. No,
Yeah.
it's just going to be a little bit different. It might take a little bit longer than people think. So, but anyhow, let's see if this holds. Right, we still got even though we're down today, we still have a low from yesterday at 48.35. Of course, the big granddaddy VWAP of the last bear market is down here at 47.17. And then if I remember correctly, let's see if I deleted that. Yeah, this is the median bear market decline is 4,085. So pretty much a 50% odds of us getting to that level, which is 900 points lower than where we're at right now. So that's a pretty significant drop.
Yeah.
So no time to go racing, looking for anything, unless you really want to go short. Let's see what the VIX did. Um, yeah, the VIX is just spiked. So, volatility is it's just too much, right? The stocks tend to do well when the VIX is down around 15, if not lower than that, and it's currently at 44. So, You add that with every the just the market being where it's at. There's obviously no sense in putting any risk in the market. Same thing with the Nasdaq, still holding yesterday's low, which is pretty good. Very bullish, bearish candle today. Tomorrow is anybody's game with Trump upping tariffs now to 104%. Uh,
Sounds like a fever, Jace.
I have freaking fever dream, right? Just good Lord, wake me up out of this, right? I'm just really glad that we saw this coming, right? And otherwise, I feel real bad for the people that are trapped in this right now, because you're damned if you do, right? If you sell out now, it's probably going to rally. And Trump could literally pull back and I'll announce and somehow announce a victory and say we're going to pause it for the next 90 days or 6 months, and this thing will just take off like a rabbit, right? So,
Yep.
maybe that'll happen. I'm not holding my breath. Small caps still just they're hurting. Not much to say about that. And then same thing with the mid caps, pretty much the exact same pattern there as the small caps. And then unfortunately bonds sold off hard again. That's not what we want to see. So we're getting dangerously close to the VWAP that I've been watching here on the 10-year iShares. Like I said, when I've seen this live below the VWAP, it's all-time low anchored VWAP. It's never good for the stock market. So hopefully this holds. The last thing we need is rising rates on top of rising prices and more inflation. And so yeah, I mean it looks rosy. Everything looks is coming up sunny there. And so
Yeah.
yeah, but anyhow, that's my rant for the day, Matt. Normally, I am very excited. Normally, I'm very bullish, and I am too. I was looking today. I'm like, where does stocks find support? Where's our next leaders? What's going to? I mean, what I want to think about over the next couple of days, and if you guys got any ideas, right? Like what's going to lead us out of this? What's going to be the next industries? What's going to happen to our economy if the dollar does lose its position? If the rest of the world says, you know what, we can't trust the United States, and it's absolutely asinine to have our global currency based on a single government's fiat currency. The reason why the dollar is so trusted is because the United States has been the most stable government over the last 70 years, right? And so, what happens if the world moves beyond that? And what happens to our industries? What happens if tariffs stay up just to protect ourselves, right, from China's manufacturing prowess? And what happens if the rest of the world de-dollarizes, not on our terms, right? Right away you think decentralized currency. So, again, that's Bitcoin right there. I mean, that's what most of the world, that's my initial reaction. I don't know what you think, Matt, but when I think of if I'm England, if I'm the Eurozone, if I'm Botswana, do I want to do currencies with a trading partner that's erratic and can change the rules on me? Or do I want to trust any government to that factor? And no, we have the technology and the means to do it where it doesn't need to be centralized anymore. So there's a very strong case for that. And but
Global
then what
current.
industries? That's the currency aspect of it. The stock markets will still go, but it won't be U.S. dominant anymore. And so that's going to be an interesting factor to put into play here. What economies, what markets are going to have the potential to supplant us, right? And so there's a lot of risk right here, and I just that's a huge roll of the dice. So where do we come out of this? I don't know, man. Let's think about that. I mean, we're gonna have the average bear market is like a year and a half, a year and 9 months. So we're 3 months into this.
Yep.
Let's if even that long. I don't even remember how long it's been. I think February. Yeah, about 2 months
February.
is when we went into the red zone, February 27th, I think. So we're gonna have about a year to ponder. So yeah, let's think about that, man.
Well, here, I'm going to do a quick little thought experiment for you, all right?
Yeah.
So the beautiful thing about Bitcoin is your good, no matter where you buy it from, whether it's China, the United States, or anything, will cost the exact same worldwide, Jace. You know, it's one worldwide currency. It's gonna be, no, I'm kidding. It's gonna be very interesting to see what happens to Bitcoin and how it gets actually valued. Because right now, the Bitcoin is tied to what?
Well, I mean, you buy it in any, we buy it in dollars,
Oh,
right? But you can buy it
so
in any currency, right?
you can buy it with
Um,
any currency, but
yeah.
the value is the value. But it's
Yeah.
based on what?
Well, it's paid, I guess, based on the dollar. So,
Currently.
yeah,
So if it
it's
becomes
going to go
based
through the
on
flipping roof, man.
nothing, yeah.
Yeah.
If Bitcoin becomes based on Bitcoin, you're either going to see the valuation of it severely decline, and see a hyperinflation like the value of Germany's dollar at the end of World War II or in World War One, where it was hyperinflation and it cost more to print the money than it did the value of the money. You know what I mean? And so there's that thing where all of a sudden all of this Bitcoin becomes just absolutely worthless because it's not tied to anything more, or it becomes so incredibly dominant because it is its own tether.
Yeah.
So some fun thought experiments to have there.
Yeah, well, let's keep going down that road. I no, I want to flesh this out, man. I mean, there's it's a huge deal. This is a big thing that we got going on here. So, I'm gonna keep doing some reading and try and try and understand like what happens next. You know, what happens next for us and how do we protect our assets and position ourselves so we can profit from it from the next time we get a move. So the good thing is an asset will, you know, if you can peg your price and volume and you can calculate the VWAP, an asset will not move higher without crossing the VWAP. I mean, it just can't. And so it's a surefire signal to know, okay, now it's moving higher. Then it's just determining your stop loss, your volatility, your basically your own goals. But it's the most surefire signal that it's on the market. I mean, it's just inescapable. So I'm pretty excited about that aspect. It's just what do we do in the meantime is going to be quite interesting. So right now, cash is king, and
Yeah.
that might not even be safe. So that's kind of scary, right? So yeah, I'm going to stop. I'm going to stop talking. Sorry, everybody. I'm going to
It's not doom and gloom as much as
yeah.
I mean there's a lot going on right now. Make sure you keep your ear to it. That's the thing. But it's not necessarily only doom and gloom. I can't say that. So
This is risk control at its maximum. Where not even the dollar is safe, right? Let's
right.
prepare. Let's hedge for that risk. Yeah, that's just the unfathomable. Yeah, I never ever would have thought I would have been thinking about that scenario. So it's kind of wild, and I'm probably way off base, which is fine too, which is fine. I hope I'm wrong. I want to be wrong, right? I want to see the market recover and jump back in and make some money in some stocks because it's fun. So, in the meantime, we're just going to sit back, relax, and watch the show, man.
Keep watching those VWAPs. Keep looking at the numbers because, again, at the end of the day, the numbers don't lie to us. You have to take them in context and see exactly what's happening around you. But at the same time, the numbers are numbers. Numbers don't lie. So that's what we take comfort in. That's what we're excited about. That's what we're constantly watching. And yeah, guys, make sure if you had fun today with us while we're talking about all of this stuff that you hit that like, hit the subscribe button, make sure to follow, share us with everybody that you know. We're going to have a lot more fun with this as we continue moving forward. You can also follow us on all social media. You can find us on Facebook, Instagram, X, Blue Sky. You can learn more about us, who we are, over at our webpage, vwapvision.com. That's vwapvision.com. Spotify, YouTube listeners, thank you. Watching over on YouTube, thank you. And make sure to subscribe over at our Patreon, patreon.com/ Empire Algorithmic Trading. We do some educational videos. We give you our daily buy and sell signals that we get from our algorithm. And yes, we do get buy and sell signals in a bear market as well. We just don't trust them, and we'll tell you how we use them to our advantage. But what you want to do with them is up to you. So make sure, again, subscribe over on Patreon, patreon.com/Empire Algorithmic Trading. And until next time, happy trading, everybody.
Happy trading, everybody. All right. See you later, Matt. Talk to you during
Later.
Arrow Review, buddy.
Arrow review.